The S&P 500 daily cloud chart. First thing we're going to look at is this 3-bar pattern here. Identical 3 crows. Crows meaning black candles. We're using bars. And black candles meaning downwards. And identical meaning similar in size. So we're pretty close there on these 3 here. And the open of bars 2 and 3 need to be close to the close of the prior bar. So this one's a little above it, but pretty close. And this one's really close here. And these candlestick patterns are like my overlap signal, where they work best for individual equities, but they certainly are something to sit up and take notice of at the index level. So what usually happens at the end of this pattern here, this third candle, is there might be a little bit more downside, and then look for another 2-stick candle pattern after this one to see which direction it's actually going to go in. And if it decides to turn around and get above the top of this first candle in the identical 3-crow pattern, then the upside could be more than 10%. And again, that's for individual equities. At the index level, it would be way less than that. And here's Bulkowski's explanation of this pattern. I'll let you pause and read it for yourself. And the downdraft was enough to print the combo by countdown 13 completion here. And while that combo countdown 13 printing was hanging over our heads and did print, that threat was diminished because this sequential by countdown 13 printed but became the 12-bar metric, so it was stale for any more downside action associated with it. So I was expecting to print the 13 and then just head straight up, but now there's a sequential by countdown 6 here. And most importantly, this sequential cluster by countdown 9 is printed, and in the previous video I stated that this sequential cluster by countdown sequence hasn't happened since the great financial crisis, so this will be hanging over our heads now, even though there's a bounce eventually to the upside. And if price exceeds the high of this bar of that identical 3 crows pattern here within the next few days, as we're waiting to see what sort of candle pattern is going to print after this bar, so give it 2 or 3 days. But if it does exceed this in that time frame, then it goes on the royal flush, meaning we print the sell setup count 9 up here. This is a buy setup count 9, so if it's opposite that and prints a 9 up here, then these could possibly be negated here, as the sequential cluster by countdown started back here in August of the 18th and has not had a sell setup count 9 end count print anywhere since then. So I believe that these will become, for sure this one will become negated, and then possibly this one too. So we'll have to wait and see if and when that happens. Bottom line, this is still a threat to print a 13. It has a long way to go to the downside, and this one too is extremely ominous. And we'll wait to see where the combo by countdown 13 completion risk level prints. I'm not sure where. might be pretty low, maybe down here below the TDST. We'll just have to wait and see. And zigzag is about 1 bar away of another lower high and possible lower low to have the swing point planted here at the high 4393.57 right at D wave down wave 4, and the D wave up wave 4 is really close to shifting over, so it almost happened on Friday. A low of 4216.45 where it printed, and a low Friday 4223.03, so just a few points away from shifting on Friday. So it could shift over and have the swing point here. And if the turnaround that could happen from this identical 3 crows pattern doesn't happen and get above this and continue moving up, then the threat is there for price to continue down. And if it continues down and ticks lower than this low, 48.28, the D wave up wave 2 will shift over and replace the D wave up wave 4. And that's a double-edged sword. Bad because it's starting over, and we had a huge downdraft, and possibly good because it's going to be starting over on the D wave up wave 3, and that's the best wave to be on. The only one that rivals that is the D wave up wave 5, which it's on now, but usually you can see that the D wave up wave 3 is the most impulsive to the upside. Another bad thing that could happen if that happens is that price would be under the disqualified sell TDST and could possibly get that qualified and confirmed. So I'm pretty close to fully expecting the shift over for the 4 over here and get the swing point to the downside probably on Monday's price action bar. So price closed right in between the last resort 325 period moving average, and that equates to the 65 week moving average. So that's the last moving average to the downside is the 65 week EMA, and then right above it, price here is the 200 simple moving average. So it's on the precipice of some serious downside. And because I called the high-low bear market, I would still sell the rip even if we exceed this within the next few days up here. Actually, any rip, it doesn't have to make it that high. See what happens at the conversion line and sell the rip. And another positive is that this demand line became disqualified, so that could be a opportunity to the upside, but again, I'm still selling the rip, and I don't think I'm buying the dip. And interestingly enough, and I should research this more because it could become very important, that this qualified demand line was not confirmed. So the qualified demand projection was not printed. So if price can turn around and exceed this, I'll have to look into it, but I believe that this could become canceled. Not that it would really matter because we've already experienced the downside and probably would have hit where the projection would have been. But still, it's an important area, this high, for the first candle of the identical 3 crows here. And this ongoing demand line, which is right on top of the disqualified sell TDST major support, would become qualified with a close below it for end of day on Monday. And it's at 4156.61. And the last arc down level, as this one was nailed and we had more ensuing downside after it, is this magnet level 3939.60. And for the long time followers here at Wake Up and Smell the Profit, it used to be called Wake Up and Smell the Mic back here, and this was the Fortress Fed resistance back here around 3900. So it finally broke out of that around March 27th. You can see it here, and then went on the tear. So it could take all of that away and come back down at least close to that 3900 level. And to eliminate that threat of the downdraft hitting around the 3900 zone, a tick higher would be required above this high on July 27th. And price punctured the lower Stark band and closed below it, closed below the channel 3 low. So I'm looking at the lower Bollinger Band 4190 area for support and maybe a bounce. And the QQE fast did cross under the QQE slow below 50 also, so the fast is headed back down towards oversold 30. Last time it didn't make it all the way to 30, so it could happen again, maybe hit it. And the ATM fast trigger down is almost to the oversold 25 line. I fully expect that to go under. And the slow trigger down has started to roll over and will probably meet the fast trigger down here below 25. So everything will be back in the basement. The pressure up -2, ATM fast trigger down, ATM slow trigger down, all in the basement again. And there is support at the disqualified exhaustion down at 4198.26, so that coincides with the lower Bollinger Band area, and it's pretty good support until it becomes qualified and confirmed, and it's not really even close to even starting that yet. And the Shanghai momentum indicator worsened. It's at -13.90. And the DeMarker 1 and ROC are still above their oversold lines respectively. REI made it down below its oversold -40 line, so the goal is to have this cross back above the oversold -40 within 5 bars, and there's already been 2, so in the next few days get above that and have DM1 stay above the oversold along with ROC. However, if REI heads up and price heads down, that means REI is seeking neutral 0, and by that time I fully expect the DeMarker 1 and ROC to be below its oversold lines. So just because this crosses back over the oversold line, we have to wait till it gets back to 0 and see what happens there, as it's trying to seek 0 because of a major downtrend. If it turns around and heads up within the next couple of days, and this starts heading back up, and somehow the marker 1 and rock stay above their oversold lines respectively, then that's a buy signal when it crosses above -40 for REI. And the Williams %R is well below its -80 oversold line, and the psychological line fell below 50. It was holding the line here for a couple of days and then fell under it, so that means a large presence of sellers. And megaphone is definitely pointed the wrong way, down, so if it can stay below this high and or this high, one of these will print a 6, and then if it heads back down and gets below this 5 or this 5, it's more realistically this megaphone by 5 and count, and gets below that, that will end its chance to print the by 7 and count 7 for megaphone down here, as 6 would print if it stays below this high, and then if the 7 prints, then there's a pretty good chance of heading up. If the 7 does not print and it starts heading down, then there will be pretty good velocity to the downside. If it does print the 7 and heads up, it's going to be pretty good velocity to the upside. And RSI is almost to the oversold 30 line here, and you can see the similarities between QQE fast and RSI as far as shape is concerned. QQE is a little smoother. It's about the same though. So the RSI is almost to 30 and QQE is still pretty good above it, so this is something interesting to watch here. And the ultimate oscillator is definitely pointed down and headed towards its oversold line here. And the commodity channel index, similar to Williams %R that we just looked at, is below its oversold line here. And all KSTs are in the negative section. The short-term KST, -0.19, just went below 0. The intermediate term is still pointed up but below 0. And the long-term KST has been on a downwards trajectory for quite a while and has no indication of turning around and heading up. It at least is above positive at positive 1.47. And the Magnificent 7 stocks still has the equal weighted index RSP in check. So pretty much everything else other than the Magnificent 7 is in check. And you can see it's getting quite high for this relative performance ratio. There is a down wave A printed here. Let's zoom in a little bit. And the ratio is way up there, almost comparable to the 2020 run up here. But I don't know, it could go a little further. It is stalling a little bit here. Let's zoom in even further. It is stalling at 3.07, same as the previous bar just about. And it is on the D wave, down wave A, and the B will print 7 bars back. Let's see, 1, 2, 3, right here. Tomorrow on Monday, if there's a tick lower than this low, then the D wave, down wave B will print, and it will be on D wave, down wave C. and that means it's going back up, and that's usually an impulsive move, just like 3 and 5. So C, 3, and 5 are the waves to be on. But this would be a real significant drop, and it looks like it's not going to happen overnight. And the Magnificent 7 will be holding the market up. If they collapse, then it's really, really big trouble.